Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is August 7th. We had the market moving higher here today. Let's turn over to the grain hedge trading platform, see where we closed off the day. Corn trading up 3.5 cents, soybeans up 20 cents on the November contract here to $9.63 and wheat in Chicago up 3 3/4 cents on the day. Now, we did get a nice piece of news out this morning. There was a reportable sale of 132,000 metric tons of new crop soybeans to China. Now, this week was a good week for export sales for new crop for soybeans. We were up over 1 million metric tons there. This just adds on to it. So it was positive here, helping to support this buying pressure that we saw in soybeans today. I think another reason why soybeans was a big mover here today is, one, we have about 54% of the U.S. soybean crop setting pods as of the crop progress report on Monday. Basically what we're seeing and what we've been seeing over the last 3 days is the 6 to 10 day and the 8 to 14 day forecast looking to be dry across the majority of the Midwest. That to me says there could be some stress for this crop during a critical part of the growing season. I think another reason why soybeans was able to move higher here today, it actually was able to move up above that 100-day moving average. We'll talk about the chart here in just a moment. The third reason I think why soybeans was able to outperform here today in the grain complex is because next week, this crop production report, as well as the USDA supply and demand report, I believe a lot of people are focusing on soybeans. Soybeans was the real wild card when it comes to resurveying the acreage in the states where there was significant planting delays, so that's going to affect soybeans. And of course, yield, whether or not we're going to see any sort of yield revisions for soybeans as well. And with the dryness coming down the pipe, will that affect overall production? So I think all those three items is kind of playing into a scenario here where we see soybeans move higher and above that 100-day moving average, which has acted as resistance. Keep in mind, August 12th, Wednesday, August 12th, we're going to have a significant couple of reports coming online around 11 o'clock Central Standard Time, so make sure that you're paying attention to that. The earlier part of the trade, I think we're going to see just some kind of jockeying in preparation for that August 12th report. Right now, here's where some of the major estimates are for yield in this upcoming report. Planalytics, their yield forecast right now is sitting right about in line with USDA estimates for corn at 166.7 bushels per acre. Informa's a little bit lower at 165.4 bushels per acre, and FC Stone's right at 165. They're the lowest of these three. When you look at soybeans, 45.6 bushels per acre is what's estimated by Planalytics. They did not revise. They update every 2 weeks. So next week they'll update theirs after the USDA releases their August report on Wednesday. Informa here, expectations right around 45.4 bushels per acre, and FC Stone at 45 bushels per acre. All of those below the USDA forecast right now of 46. So it's going to be interesting to see if we get any sort of yield revisions. Again, like I said, in this in the crop production report and the USDA supply and demand report, there will be the results of these resurveyed acres. So we could see acreage move lower in some of the states that saw significant planting delays due to excessively wet conditions. Take a look at the November soybean chart. You're going to notice that we are able to get up above that 100-day moving average. We were even able to close that gap there in the daily chart. So all this very positive. We talked about the three reasons why we were able to move higher here today. I wouldn't be surprised if early on next week we continue a little bit of a move to the upside. I would expect this 100-day moving average to provide some support from this point going forward, at least in the short term. Take a look at the weather outlook. This is what I'm talking about. 6 to 10 day weather outlook, drier than drier than average across the majority of the grain belt. And then the 8 to 14 day, no real relief, no rain in sight other than northern Minnesota, northern Wisconsin, parts of the eastern part of North Dakota. So I think that is going to put some pressure here on soybeans and add a little bit of buying pressure to that particular grain. Look at the crop moisture index. You'll notice Wisconsin here, Minnesota, North Dakota, eastern parts of South Dakota, they could use a little bit more moisture here. So this is something that we're paying close attention to. Still, Iowa, Missouri, parts of Illinois and Indiana seem to have an ample supply of crop moisture in the soil. Let's take a quick look. This is Friday. We do talk about the cash market, so let's just take a quick look at the changes in basis across the U.S. here this week. Take a look. This is corn basis, up 2 cents on average across the U.S. We saw export bids lower this week. That put pressure on river terminals. You can really see the red pressure there going up from Louisiana all the way to Indiana, Illinois, all along the river. So we did notice river terminals down as much as 10 cents as a result of export bids being slightly weaker. In general, that was where we saw the weakness. Ethanol was the one source of strength. We did see them up 4 cents on average across all ethanol sector, across the entire ethanol sector. You'll notice ethanol plants on the eastern part of the grain belt were able to kind of pick it up a little bit more. There is crop production concerns in the eastern part of the grain belt, and that's why we've seen some of these end users start bidding up. But the eastern ethanol plants were up as much as 10 to 15 cents here on the week. When you look at soybean basis, you'll notice a lot of red across the board here. Unchanged on average across the U.S., but the Gulf plunged 41 cents on the week. Now this week we had huge, over 400,000 metric tons of old crop export sales cancellations. When that came across, that really had a big impact on the Gulf. And with the Gulf moving lower, that impacted the entire river markets. River markets move lower as well, thus that large strip of red right across the center of this country. The one part of the brightness here is that plants were up 3 cents on the week. There was big moves into the positive. There was also changes to the negatives this week as end users kind of jockey around trying to compete for those old crop supplies. So guys, that pretty much wraps up today's show. If you have any questions about what we talked about today, please give the office a call. We'll be talking about the expectations on Monday and Tuesday as we go into this big WASDE report on Wednesday. This report, I think, will add some volatility into the market, just considering how much uncertainty there is on overall crop production. You got the East, which has really not the greatest crop this year. You got the West, which seems to be looking exceptionally good. Will those two be able to cancel each other out, or on aggregate across the U.S., will we move lower in production? We'll have to see on Wednesday next week. So a lot coming down the pipe to be excited about. If you have any questions about what we talked about, like I said, give us a call. And if you haven't done so already, take a demo of that 14-day free trial. See what it's like to have live quotes in the palm of your hand and on your desktop. Thanks a lot for tuning in. Have a safe weekend. We'll see you here on Monday.